Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob Kudla here. Guys, retail is all in. We're going to tell you why that matters. Let's dive in.
Trade Genius.
So Bob, this chart's really interesting because we have not seen these levels since like 2006, 2007.
Yeah, so what people don't understand about the market is that big money can't exit without causing the market to go down. And so what they need to do is they need to have retail come and be the buyer of last resort. And it's been taken for years for them to do it, and they finally did it. I'm going to throw the chart up here, Phil. This is what they call the worry ratio of retail traders, and everybody is no longer worried. And with Trump being reelected, is that we had even more enthusiasm, which potential to carry on here for a couple weeks or a couple months. We don't know exactly sure when, but it's getting a little frothy here with the enthusiasm. And I was just flipping around Twitter, and it's just the bulls are mocking the bears right now. And usually, I wish there was a bull bear mocking on Twitter or X ratio we can look at, because usually when they get that confident and that cocky, a sledgehammer is coming their way. And this is important because the institutional money and their media partners are going to be hyping everything to get you to buy what they're selling. And then they're going to rug pull it. And, if you notice, options open interest has exploded too, Phil. So a lot of these guys are doing what's called replacement strategies. They've already sold their shares to retail. They replaced them with relatively inexpensive options in case they're wrong and the price keeps moving higher. And if they're wrong about and the market dumps, those options were throwaway. Those were just hedges against their position. And then retail is going to get their heads handed to them. So I think we're still on the same path here. And I'm going to throw it back to you because, we were looking maybe at Inauguration Day being maybe the tipping point. But now we start looking at some of the price action here for Thanksgiving, even though Friday was a nice day. It sure seems like there's a lot of struggling in the market, especially the large caps. And the large caps matter because they drive the indexes. So what are your thoughts on that?
Well, I think there are going to be either two scenarios where if we're going to go into a top here going into the end of the year or the beginning of Q1, what I'm looking for is maybe something into just before Christmas, possibly, or we extend it out. A lot of times what will happen is you get that extension, like you're saying, if they want to defer taxes, then what we'll see is a top around the end of the first week of January, somewhere in that, depending on where the calendar is, don't have it up, but a lot of times that end of that first week, we get a top, and then you'll see like a significant pullback. Now, if we get that January scenario, that's kind of interesting because you front run the inauguration a little bit. More and more eyes are on that inauguration as some sort of short-term top. And what I'm seeing is more people are looking at that as a short-term top versus the top where we don't recover it a la like, 2007, 2008 type of top. So I think that's like the two scenarios that we have. And I think you have to really watch what happens going into Christmas, because I do think we're going to get that rally that we typically do in December, right? And then where that goes, we have there's some major fib targets we have up there. 6,100 is one, 6,400 plus is the other one. So if we run up to the 6,100, which, at this point, that's not too far away now with the way the market's moving over the next 2 weeks, it's only 100 plus points higher on the futures, then I think we could possibly see a breather there if we do get that before Christmas holiday week comes around.
Yeah, and next week's supposed to be a red week statistically. So, don't assume anything more than just some overhang, but that week 2 and week 3 of December, it better be bullish and making new highs, or we're in trouble. My personal view on this, Phil, is that we get a top in the second week in January that extends down into a March low, and then we push higher again in April, because April is typically a very bullish month, but we make a lower high. And then I think the wave 3 starts at that point, and a lot of Trump's policies then are that he can enact without legislation are going to be in effect, and I think they're deflationary, and I think people are going to be cautious, and I think that's going to be the big wave 3 down, into June, maybe all the way into September. So that's my working thesis, although you and I, we just trade the charts, but it helps me with my hedging. Like, I'm already starting to change some of my ratios here. We're starting to see TLT get a bid again, and that's something people really need to keep keep an eye on. We're watching Nvidia. Nvidia is really circling the drain here a little bit. And if Nvidia can't hold their gains, they're going to bring the Q market down. So those are things you got to watch out for. The other chart, I don't know if we showed this chart before or we just talked about it, but global M2 is collapsing. And usually what is a 3-month window or 3-week window. I think it's a 3-month window if memory serves. That starts the drain pipe on Bitcoin. And I was talking to you before the show started, is that, right now everybody is, 10 weeks to 9 more months of a crypto run, of a Bitcoin run. But if this global M2 has a high correlation, if that continues to play out, Phil, I don't see how Bitcoin can rise past maybe, the end of January or so at the latest before taking a pretty serious breather. And I think that would scare a lot of people to see Bitcoin rolling over again at the same time you have these recessionary impacts. And we're going to talk about some charts this week that are pretty scary in terms of recessions here. So I'll give you the last word.
Yeah, I agree. If we go up or go down into March and then we have the echo rally basically that establishes a lower high, then what I think if we're right about all of that, because I generally agree with that path as well, and we're really just coming down to where does the first high happen, right? So generally all that rhymes. Where we're right or wrong, I think, is what happens for the rest of the year after that. And I think if we're right, then what we're going to see is basically everything crater into Q4 2025. And that's really opposite of what people like in the Bitcoin world, right? They're looking at a typical halving cycle that rallies into Q4 2025, right? Because you usually have that extension past the halving where the peaks happen. But they're not looking at it in terms of like the macroeconomic situation, right? So Bitcoin's never been through a recession, crypto's never been through a recession. And I think those things really matter because ultimately I think Bitcoin is a function of leverage from liquidity flows in the system. And so if net liquidity, global liquidity is going down, which typically it does in a recessionary environment, then you really don't have the fuel for making Bitcoin go higher. The caveat to that, or the fly in the ointment in that scenario, would be if we go into supply shock for Bitcoin, but I don't think that's likely at this point. I think there's still too much supplies floating out there. And I think you need several world governments to just go on a buying spree going into like more of a reserve asset type program. I just don't see that happening yet. Do I think that happens next cycle? I do. And I think that's where you're going to see these just extremely parabolic moves in Bitcoin, but we're not quite there just yet.
Great. Hey guys, last day for the Black Friday special. Thank you for everybody who's joined. We've an overwhelming response, and we talk macro here, but in the trading rooms, we're focused on our charts. Because we're in these trades 1 to 3 days, 1 to 2 weeks kind of environment, and our algorithm is just absolutely killing it. So come check us out at tradelikeagenius.com and enjoy a really good group of people, and we'll definitely help you learn how to trade better. Thanks, Phil. I'll see you guys later.
Bye.
Trade Genius.